Welcome to another episode of Healthcare Connections podcast, powered by Healthcare Compliance Pros. I am your host, Jeremy Winn. Our purpose for this podcast is to introduce you to key topics and experts in the healthcare industry to ensure you have what you need to successfully manage your practice. Please subscribe and follow us on our social media channels to make sure you don't miss any new episodes. If you have recommendations for guests or topics for this podcast, email me at jwin@hcp.md. With that, enjoy this episode of the Healthcare Connections podcast. Hello, welcome to this episode of the Healthcare Connections podcast. I'm Jeremy Winn, your host, Director of Sales here at Healthcare Compliance Pros. And we've got a wonderful guest on today, somebody that he and I just connected recently and had some good conversations and thought it would be helpful to bring him on. He's got some unique perspectives in the private equity space. So we've got Ariez Dustoor with us. He's a partner at NB Group. Ariez, welcome to the podcast.
Hey, Jeremy, great to be with you. Thanks for having me on.
Absolutely. If you don't mind, take a couple minutes, talk to us. You've got a really extensive history in private equity, been at a couple really large firms and groups, and I thought it'd be good to hear your journey of where you've been, kind of what you've been up to, and how you got to NB Group.
Sure. So I started my career, this would have been about 20 years ago, in management consulting. So I was working at McKinsey and Company, which is a large multinational strategy consulting firm. I did that for a couple of years, and I'd always had an interest in investing, and did not see myself kind of building a long-term career in consulting, and so ended up joining a middle market private equity firm out in Boston. Did that for about a year and a half. And I think enjoyed the work, enjoyed the investing, but I think probably that environment was maybe not the best fit for me. It was also the middle. I joined in summer of 2008, so it's just a really uh, interesting time to be trying to do anything
Definitely.
related to investing and acquisitions. And then after that, prior to starting our firm, I'd spent several years in different kind of operating roles. And most recently, I'd started a company, ended up selling that, and was in a spot where I really didn't want to continue operating. I knew I wanted to get back to investing, but had really had an entrepreneurial, I think a bit of an entrepreneurial streak, and wanted to do something on my own, with more flexibility and ability to build something. And so I ended up, I have a close friend, and with kind of similar backgrounds, and ended up teaming back in 2017, and we started our firm, and we've been doing this now for I guess going on 8 years.
That's awesome. Yeah. So talk to us about NB Group. I find you guys to be a little bit unique, and I think it's why I wanted to have you on. But talk to us about your philosophy in investing. Some of your criteria that you look at, and again, what makes NB Group unique in the private equity space.
Sure. So our firm is focused on, we're trying to be the first kind of institutional capital into either family or founder owned businesses in two core sectors. And one of those sectors, which is going to be most relevant probably for your listeners, is healthcare. And we are typically looking for, from a financial perspective, businesses with 10 to $100 million plus of revenue. And then, as important, or perhaps even more important, is we are looking for businesses with $3 to $15 million of EBITDA or cash flow. Sometimes we will go below those numbers. So we'll look at businesses. It's not a hard cutoff. It has to be, 3 million of EBITDA. We will look below that. But we're looking for businesses kind of in that general size range. And we're either, we're looking to own, really call it 25 to 80% of a business. So if we're owning less than 50%, obviously we're sort of a minority owner. And if it's more than 50%, we're a majority owner. But in most cases, we're tending to partner with the existing team and owner. And that can be them either staying in place, doing what they're doing, continuing to run the business. It could be them transitioning into another role or out of the business over time.
Yeah.
But we really like to see some continued involvement from the team and really view it as the existing team and view it as a partnership. And I would say when we get involved with these businesses, particularly in healthcare, our focus is broadly speaking two things. One is growth of the business and really
Hmm.
trying to accelerate that. And the second is broadly speaking, kind of professionalization,
Yeah.
and helping these companies operate at a higher level over time. And the two are kind of symbiotic, right? So to grow and really maximize the potential of the business, you need to make sure you have the team and the infrastructure and the processes and all those things in place. But and I'd say we're fairly hands on, so we're not running these businesses day to day. We're relying on a management team to do that. But we're really trying to. It's an overused word, but we're really trying to figure out ways to add value.
Yeah, absolutely. Yeah, I love that. What's your traditional hold period? I usually hear, 3 to 5 years, although I think in recent years that's been more 5 to 7 for a lot of groups. I don't know if you've got, a typical hold period that you look for, or if it just depends on the investment.
We're flexible, so we you have to put something on paper, right, and sort of have a plan. And so that typically for us, that's 5 years.
Yeah.
But if it ends up being longer than that, that's fine. If it ends up being shorter, that's okay too. But we sort of plan on 5 years. In some situations, if there's a compelling reason for us, but also the owner of the business, the seller, is looking for some sort of longer term duration, we're able to accommodate that too. So we've looked at opportunities that we could really hold indefinitely if we needed to and kind of grow and compound. And we have the flexibility to do that. But usually it's sort of in that 5-ish year range.
Yeah. Great. Yeah, appreciate that. So, talk to us about the current market. We're kind of recording this at an interesting time where, we're here early April. Markets are kind of all over the place. Tariffs are the big, keyword out there that everybody's talking about. So, I'm curious, in the private equity space and particularly healthcare, let's focus maybe on what you're seeing in healthcare in general. What does the current market look like? Is it going as expected, or has it gone slower to start the year, or better? And then what are you anticipating over the coming months?
Yeah, it's hard to say, right? It's truly like day to day with everything. But I would say that I think investors, broadly speaking, investors, including in healthcare, had come into the year pretty positive, pretty hopeful. There's been a backlog of activity, so delayed, activity that's been delayed for a couple of years for different reasons. But interest rates had risen, there'd been some economic uncertainty, then you had the election, and I think people had come out of that very hopeful that we're going to see an uptick in activity. I think the start to the year, first month or two, I don't know that we didn't see a huge uptick, but I think the market was consistent with activity was picking up. Having
Yeah.
said that, now I expect, and we're just starting to have these conversations, right? I mean, this is all less than a week old, but I think you're starting to see people. There's probably more of a wait and see approach,
Yeah.
for sure. And so I whatever you think about the tariffs or the politics of it, I think it's safe to say that this is not, generally speaking, like it's not going to be positive for deal making. I think it's hard to make that case. I think in healthcare specifically, I would say broadly speaking for healthcare, it's probably a good sector to be in generally.
Yeah.
A lot of these businesses are really not. The impact of tariffs is minimal. They don't have inputs coming from necessarily overseas, or they're not necessarily manufacturing something where they need inputs, and it has this major impact on their business. And a lot of these are essential services. So I mean, we're invested in a
Right.
primary care business, for example, and that really, its heart rate on China is 100% or 0, whatever's going on. People need primary care. We don't have a lot of inputs coming from overseas. So I think if you're in one of those businesses, it's a good place to be. Having said that, you have people that are, you know, just talking to a banker yesterday that has a business that makes specialized needles, and their primary place of production is China, and
Yeah.
that deal is probably going to get put on hold
Yep.
because there's so much uncertainty. So I think you can't overly generalize. It's going to be business to business, but I think there's going to be a general overhang over the market. If you're in a subsector of healthcare that is not directly affected by these tariffs, you're probably going to feel the impact of that overhang, but it's going to be much less than other sectors.
Yeah. Yeah. It's in a previous life, I was in the world of philanthropy and did fundraising and investing and fundraising. Very similar. We used to always say, in bad times, people will give and people will invest. In good times, people will give, people invest. In uncertain times, they hold. And that's what I think what we're seeing right now, for sure. So yeah, it lines up really well with my past experience.
And look, if you have a good business and it's got a good business model, you know you're lowering costs for people, you're providing good patient care, whatever it is you're doing in healthcare, your business is growing, you're strengthening your team. You got to run your business, right, regardless of what's happening out there. I think there's a market for that. There always has been. It's a question of probably it's a question of timing. It's you've had people that, for example, could have sold their business 3 years ago, and they've seen a you know moderation in valuations, and people have been waiting, like looking for some sort of turnaround. Maybe that's not going to happen, but that doesn't mean there's not an interest from buyers in your
Yeah.
business and helping you
Yeah.
grow it and all of that. It's just sometimes people might need to adjust expectations.
Absolutely. So let's talk a little bit about, let's keep going down this road. Let's go to some due diligence stuff. Um, again, we have a lot of clients, and many of them are part of large growing groups that are doing acquisitions. Many are private equity backed currently, but the majority of our clients aren't. They're solo practitioners, still privately owned, and those that may be looking at some point for a transaction. Let's talk about some red flags that you look at that potentially could trip up a deal, install it, delay it, or even cause you to walk away from it. And so people can kind of be aware of what to look for.
Yeah, I would mention a couple things, and I'm going to tailor these comments particularly to kind of the practice management space. So if you have some type of medical practice or your medical practice group, so one thing that we look at a lot, and a lot of other buyers do, is we're going to look at provider. What is the share of revenue being produced by each provider?
Mm-hmm.
And ideally, we're looking for a diverse provider mix, right? You don't want a single provider that's generating a preponderance or a very high percentage of your business.
Mm-hmm.
So I would say that's one piece that we look at. I think a second that's a little more is perhaps not as precise to analyze, but I think it's something you really should think about as an owner. Is you want to make sure that the business is not highly dependent on you as an owner. You want to have some. It's not going to be. It depends on the business, and this is a place where we help a lot, and we will come in and really work with the team to build this. But you want to try to, I think, to the extent possible, build a little bit of a kind of a management team around you, and I think that reduces the risk to the business, but also gives a buyer like us more to build on when it comes to the business. And then I think a third piece, that this really goes for any business outside of healthcare, but it's something even outside of healthcare, but we see this all the time, is people will go into a process or the intention to sell their business, but they do not have uh, robust financials,
Yeah.
or it's unorganized, or there's issues, or they need to go back and think about recategorizing things.
Mm-hmm.
You really want to spend that time up front to get your financials kind of clean, uh, the ability to answer specific questions that people are going to ask, history. You want to have that all ready to go. You don't want to be in a situation where you're ideally starting to talk to someone, and now you need to hit pause and go do all that work.
Right.
So I
Yeah.
mean, those are a couple, not meant to be exhaustive, but I think those are a couple things that we think about.
Love that. Okay. Ariz, thank you so much for your time today. I'll just mention for those that if you're interested in connecting with Ariz, nbgroup.us is their website. and you can find information there to contact Ariez and learn more. But Ariez, thank you. Appreciate your time today and your insights and you learning more about NB Group and how you fit into the private equity space.
Yeah, appreciate it. Love connecting, and hopefully your listeners found some of this useful. And if anyone's interested in
Absolutely.
connecting with us, always happy to chat. Thanks, Jeremy.
Okay. Thanks, Ariez.
Thank you for tuning in to this episode of the Healthcare Connections podcast. For more information on the topic we covered today, you can reach out to me or to our guest. For any additional information on healthcare compliance pros, feel free to email me at jwin@hcp.md. Don't forget to tune in next week. Thank you.